So greetings to everyone and welcome to another market outlook session on GEPL Capital's YouTube channel. So first, we will start with the key highlights, what exactly happened in the last few days in the market. Next, we will see like what will be the future outlook, what should we expect in the upcoming weeks from the market. So let me first share my screen in order to move forward. So let us start with the key updates from this week. So initially, so first of all, India's manufacturing PMI was released for the month of March, and it came at an 8-month of high of 58.1. This was primarily driven by the customers' interest in the market and the increased demand conditions over the market. So it was a very positive news as India's manufacturing PMI started showing strength again after a weak performance in the month of Jan and Feb. The next update is from the United States. So the US CPI data was released for the month of March, and it showcased that the inflation in the US has been declining over the past 3 months. And similarly, in the month of March, it came down at 2.54% compared to 3.5% in the month of March 2024 and 2.8% in the month of February 2025. So this indicates that the inflation has been cooling down in the US, and we might expect uh, future rate cuts in the United States. However, given the tariffs conditions, the US Fed is still in a dilemma to whether lower its interest rates or not, despite good CPI data. The next update is on the tariff side. So recently the US has decided to pause its reciprocal tariffs on countries for the next 90 days except China. On China, the US has increased its tariffs to 125%, and yesterday, China also retaliated to these tariffs by imposing 125% tariffs on the US imports. So this indicates that as a result of this, we saw that the Indian markets as well as other Asian markets was trading on the greener side over the last 2 days. So this was a very positive news as the tariffs has been paused by the United States, and they are willing to discuss and renegotiate the tariff hikes. The next update is from the RBI's MPC meet. Uh, 2 days back, RBI reduced its repo rate by 25 basis points to 6%. This was the second rate cut in the calendar year 2025 and the first rate in the fiscal year 2025-2026. So the RBI has also shifted the stance from previous of neutral to accommodative. So basically, accommodative stance means that RBI will either keep its interest rate stagnant at 6% or reduce its interest rate based on the inflation data that comes over the next few months. So this is a very positive news for banking and financial services sectors, the automotive sectors, as well as realty sector, as the financing costs will decline over the coming months with this shift in the interest rate. The next key update is the result season. So result season has been started, and the one of the biggest IT major TCS has reported its fourth quarter results. However, the company's results were not very much good, and we saw that the impact in its stock in today's market. So TCS reported a very uh, low to negative growth in the fourth quarter as the company's net profit declined in the fourth quarter. However, the company's revenue was up by approximately 5% year-over-year basis. So this and the company also missed the consensus estimate. As a result of this, uh, we saw the stock to decline in the market. Further, the management has provided a cautious commentary on the US market given the tariff hikes, and they might miss some of the new orders, and as due to this rising tariffs. So a very cautious outlook on the FY26 results, and as a result of this, we are currently avoiding the overall IT sector as of now, given the global uncertainty persisting on the IT sector. On the next slide, we can see the tariff uh, chart. So we can see that the baseline tariff has been 10%, and as we move forward, we can see that European Union has been imposed by 20% tariffs over and above this baseline. The next key hike was in India. We can see that a 26% reciprocal tariff was imposed on India. The other South Asian countries and Asian countries saw a tariff hike of 32% in China, in Taiwan. Indonesia saw 32% tariff hike. Bangladesh saw 37%, whereas Sri Lanka, Vietnam, and Cambodia saw tariff hikes above 40%. This indicates that overall, these tariff hikes could be a positive news for India, as India will be able to gain market shares from these countries given the lower cost it will be providing to the imports in the United States. So key sectors will be the textile industry, as most of the textiles are being purchased through countries like Vietnam in the US. So India might be a key beneficiary to this rate hikes on other South Asian countries. In the next slide, we can see that the oil prices has been declining over the 2-3 days, over the past 2-3 days. This was primarily due to the as OPEC countries have been suddenly increased the supplies, due to which the prices of oil have been declining over the past few days. The reasons have been uncertain. However, we believe that this is primarily to gain the market share from other oil producing countries. So OPEC has increased its oil production capacity and has been increasing its supply. Previously, it was 135,000 barrels per day. Now it has increased to 4,11,000 barrels per day. So a significant jump in the production and supply of oil, which resulted in the decline in oil prices. To compensate for this oil prices, the Indian government has imposed special excise duty on oil, OMC, oil, petrol, and diesel in India by ₹2 per liter. So this excise duty is primarily for OMC companies, and this won't be impacting the retailers. As a result of this, given in order to offset the declining prices, the government has imposed this excise duty on OMC companies. Further, if the OPEC further increases its supply, the demand weakens, the low prices may persist. However, given the geopolitical issues, and if due to the geopolitical issues and if the demand becomes rebounds over the next few days, we might see the prices again to increase. So we should stay on alert to this global development and monitor how the sectors will be affected due to these oil prices. So the primary sectors that are being affected through these oil prices are basically OMC's companies such as ONGC, GAIL, whereas paint manufacturing companies such as Asian Paint, Berger Paints, as oil has been used as a raw material to manufacture paint. So a decline in oil prices basically boost their margins, might boost the margins over the upcoming quarters. So in this slide, what are the key positive points to be keep an eye on? So the first, we would say that as I mentioned in the previous slide as well, that the higher tariffs imposed on the key competitor countries such as China, Vietnam, and Thailand presents a very lucrative opportunity for India, especially in the textile as well as in the electronic sector. So this becomes a key positive point for India to gain market share from other countries. The next pointer I would say is that if the oil prices further declines and dollar weakens, this benefits India, especially sectors in OMCs and paint sector. So this will be a very positive news for India. Plus, as India imports most of its oil, so the current account deficit will also decline given the lower end decline in oil prices. So these were the few points that we have to be watch out for. So what are we suggesting for our investors to going forward? So currently we are suggesting that suggesting that investors should continue their SIPs in their stocks as well as in mutual funds in order to gain the volatility in the market and create wealth over the longer run. So we should pick in order to generate a good amount of wealth in the longer run. We should pick right pockets in each sector to invest in during this uncertain macro environment. This as it is a very good opportunity as markets are being volatile and we should invest in good companies and do a specific amount of SIPs in each stock. So it will help us generate wealth in the longer run. So that's all from my side for today, and we hope you like the video. Share this video and subscribe our channel GEPL Capital.